Hello billionaire traders, welcome back to another wonderful video episode. Now in this video I'll be explaining to you guys how I'm able to trade the VIX index, right, which is the volatility indices. And you know the only broker that provides this is Deriv, right? So in your country, I don't know where you're watching from, just go to Deriv and create an account. And this particular pair or instrument is not as the same as your forex pair, right? So this is not the type that is being controlled by economic data or geopolitical issue or event that is happening around the world, right? But this is being controlled by algorithm, right? And more detailed video on this later. But this particular video, I want to explain to you how I'm able to make good pips on this particular pair, right? Which is VIX 75. It's not a pair, it's just instrument. VIX 75 IES. We have several of them. If you come on here, you will see the list goes like this, right? And this particular broker also creates you an opportunity to trade your currency pair, which is forex, stocks, commodities, and cryptocurrency. But based on this video, we're going to be limiting our video to the volatility 75 IES. So if you want the beginner's course on this, you can just signify by putting it in the description below, right? So let's dive right in. If you want to start analyzing, still the same approach. Top-down analysis, you have to go to your daily time frame, right? This particular broker gives you the opportunity to see from the daily time frame up onto 1 minute time frame. So there's no provision for like 1 week or 1 month, right? Now when I saw this, I was able to understand the movement of the market, right? Now you notice that the market was breaking series of lows, right? Breaking some lows. Then it got here, right? And came back to retest, right? So this is like a continuous wedge, right? The market is currently forming, right? Like a continuous wedge. So I believe if you are looking at this market to trade, you need to understand the direction of the market. So this is like a falling wedge, all right? A falling wedge pattern where market have been selling and start consolidating, right? Then only to break to the downside. But right now we are still in that consolidation phase. So what you want to be looking for is opportunity to look for selling opportunity, right? So I came to my daily time frame just to see what the market is doing or where it's heading to, right? Then on the 4-hour time frame, I was able to notice that the market broke this level of support, right? Broke the support and came back to retest it. So on this, I was looking for that push, right? And that was what I was able to capitalize on, right? And luckily, I was also able to catch this sell from here, but I came out here, right? So I didn't catch all this drop, but I was able to catch this other drop, right? So let's dive right in. Now, on the 1 hour time frame, what did I notice? I haven't discovered that the market has come to touch our resistance. So I was looking for possible way for the market to give me a selling opportunity, right? Now, if you look at it right now, this is the resistance, the support that the market broke out from, right? And you can see it clearly from here, right? You can see it clearly from here, which means a former support turning towards resistance here. So on this resistance, you want to go in, all right? But I missed this particular sniper entry. So I was able to look for another entry here. Now, how I was able to get it is when you scale in further, you'll notice that the market broke a level of support here, right? And this is the push that broke this support, right? So it's just like a flip zone. When the market breaks, you need to wait for it to come back here and take your sell opportunity. And that was what happened here. You can see the market broke and it has to come back to retest it. You can see. So at this junction, I had to scale down to 15-minute time frame for a better entry, right? Now, there's a particular strategy I use in taking this trade, right? And that is what I explain or I teach in my inner circle community, right? Now, because you can see that the market pushed a bit higher than this, right? And with this particular strategy, I was able to catch this move. Why? Because I knew sometimes there are manipulations in the market. Even in forex trading, you have some manipulations where the market will be waiting for you to get in at a particular point and they just snap you, turn you to liquidity before moving your direction, right? But the market got here and I was able to come on board, right? Then my stop loss was here. I knew if the market will have to take me out, that may have to take away this weak rejection. So I make sure that I put my stop loss above this weak rejection, right? And with my confirmation again, my confluences rather of the moving average, right? This is 50 moving average. I have a detailed video about how to use the moving average, right? It's a strategy on its own, and you can go and watch that video after this particular video, or the link will be pegged here at the top corner of this screen. Now let's continue, right? With this now, I knew the price is definitely coming here, right? But this particular trade was very early in the morning, around that 4 a.m. in the morning, right? I just, okay, let me just set my TP here. Why? Because sometimes the market can come, respect this key level here, and come back into entry. Why did I also set my TP here? Why? Because I was not going to be actively monitoring the trade, right? So if I was actively monitoring the trade, here would have been my overall TP, right? So my plan was, should in case the market is able to get here and come back, I would have been out of the market already. But fortunately, before I could come on board, the market have gone beyond my expectation. But the good thing is just make money, right? The moment you are making money, don't be greedy. You can always catch the market anytime at any day, right? So with this, I was able to catch this particular move. You can see what happened here. So now why I missed this particular move, I had to come and wait for the sell here, right? I knew already that market is coming to take out liquidity, get here to sell, right? Why? Because these are structural liquidity. You can see all trendline liquidity. So price got here, respecting this other side here, right? Respecting this particular level here as its resistance, right? Then sell down here, right? So once you are able to get the direction of the market, trust me, you're going to make good pips out of the market. So this is just a brief explanation on how to trade the volatility indices, right? The movement is quite different from the way forex move, right? The normal forex, the normal currency pair moves, right? And this also needs extra patience and information to be able to trade it. A lot of forex traders who are very good in the currency pair find it difficult to trade this particular pair. But if you need a comprehensive video about this, you want to check the link below to join our mentorship so that you can also grab how you can trade both forex, cryptocurrency, the volatility indices, and any other instrument that you want to trade, right? Like I'm doing this video now, this is Friday, Good Friday. All the markets are closed. There are public holidays. I'm talking about in gold, the currency pairs, they are closed. But this particular market is open 24 hours a day. Even on Saturday and Sunday, public holiday, you can trade. And this was made today, right? You can imagine making money every day in the market, right? So if this video has blessed you, make sure you like this video, subscribe to this channel, and I'll catch you in my next coming up video. Thank you.